So the first thing was when a capital asset is transferred. So we are looked at what is capital asset. We now come to the most important part of the capital gains chapter, which is transfer. So what is the meaning of transfer? The term transfer under the Income Tax Act has got a very wide definition. Again, it is an inclusive definition. It is why I'm emphasizing the fact that inclusive definition. The reason is that definitions can be inclusive or exhaustive or specific. Inclusive means, for example, transfer includes A, B, C, D, E, F, G, which means that there can be something else also which can be considered as transfer, but these are specifically mentioned. Similar kind of definition is there in case of income, unfortunately. That income includes A, B, C, D, E, F, G, which means that even if there is something other than A, B, C, D, E, F, G, it could be income, because those are only illustrative items of income which are included in the definition. So as far as transfer is concerned, transfer includes sale, which we all are aware of, and which is generally what we all feel is the only thing that gives rise to capital gains. But transfer also includes exchange or relinquishment of capital asset. Now, often I'm preempting a question from your side that my house is going in for redevelopment. So I have an old house, I give it to the developer, all other people in the society also give it up, and the developer will demolish the building and give me another house, a new house. Does that amount to a capital, will that give rise to a capital gains? If you look at the definition of transfer, transfer includes exchange. In this kind of a case, what is happening? I am giving my old flat, and in exchange I will get a new flat. So very simply put, technically it does give rise to capital gain. It does give rise to a transfer. And if it gives rise to a transfer, then and if that asset is your capital asset, then it means that a capital gains will have to be calculated. I'm not trying to scare you into saying that you'll have to pay tax. In all likelihood, there will be no tax liability. But theoretically, there is a transfer taking place when an exchange of an asset takes place. Similarly, relinquishment of capital asset. Let us say, somebody over here is living. He has a house, he owns a building in Dadar, and he's staying on the top floor, and all the floors below are given out on rent. And the tenancy, finally after 20 years of fighting with the tenants and failing to get rid of them, they finally decide that let's make them ownership. So the landlord offers to the tenants that I will make your tenancy into ownership. So he offers. What happens is that when you relinquish your tenancy, if you are a tenant and you decide that I don't want to stay, and you get out, you give away the tenancy to the landlord or maybe to a third person, and you get some money in return. So that is called relinquishment of capital asset. Tenancy is not you are not the owner of the flat as a tenant, but you only have a right of tenancy. So that right of tenancy can constitute a capital asset. When you give it up, it is relinquishment. Therefore, when you get some money, it will be considered as the sale consideration for that relinquishment of the capital asset. Extinguishment of any rights in the capital asset, again, that could be treated as a transfer. Compulsory acquisition of any capital asset under any law is also falls within the definition of transfer. And similarly, distribution of money or other assets by a company on liquidation, maturity or redemption of zero coupon bonds, all these are falling within the definition of transfer.